All right, welcome back. Economics panel. We'll get straight into it now with the Australian newspaper's economic editor, Adam Crichton, on Skype, and business and economics commentator, Peter Switzer, in our Sydney studio. Gentlemen, great to have you with me tonight. I'm going to start with you, if I can, Peter Switzer. Give me a sense of where you see things now after those big series of announcements by the government, in particular, the $130 billion job keeper payment announced the other day, not yet received. Where do you think we're sitting?
Well, there's many ways you can look at it in terms of, the end results. But let's just take the stock market, for example. I always see the stock market as like a window on the economy. Now, when all of this happened, coronavirus was happening, we didn't know what the central banks would do, we didn't know what the government would do. That stock market of ours fell 36%. Now, since the stimulus package has been put in place, which includes Reserve Bank support and the big banks getting involved in providing loans and things like that, we're now seeing the stock market retrace 15%. So that's a really good indication that the measures put in place so far are starting to work. What we need now is the final important success, that is the virus data to start showing that the curve is flattening, deaths are decreasing and infection rates are decreasing. We see that, we'll probably see another 15%. We'll still be down, but it'll be a great improvement from where we were 2 or 3 weeks ago.
And of course, the real climb will come when we get a vaccine, when we know that the population can be inoculated. We all move back into the general economy. Let's hope, as before. But there'll be a lot of casualties, Adam Crichton, and not least of all our balance sheet. It's said that our public debt will rise to $1.5 trillion. I've never said anything much with a T in front of it for Australia. Pretty horrific numbers.
Yeah, look, certainly that's true. I mean, I certainly agree with Peter that things seem to have calmed down a bit at the markets, but I am worrying longer term whether this extraordinary stimulus is going to be affordable. I mean, it is an extra $500 billion of debt if you combine federal and state. Now, sure, at the moment, interest rates are low. That's fairly affordable. As economist Chris Richardson has pointed out, it's only $1.2 billion extra in interest costs. But of course, it may not be the case that interest rates stay very low. I mean, certainly this virus has been a huge surprise to us. So I think it'd be very foolish to assume that interest rates are going to stay kind of where they are for another 10 or 15 years, because realistically, that's how long we're going to be having this enormous debt around us.
Peter Switzer, what about the world economy more broadly? We know coronavirus is in a number of G20 countries. It hasn't even started horrifically. It's marched through the developing world. What's your global outlook look like?
Well, I think we're basically going to see terrible numbers in the March quarter will be negative, the June quarter will be terrible. I think Goldman Sachs calculated or forecasted that the American economy will be down 30-odd% in the June quarter, but a rebound of 19% in the September quarter. So you can see what's going on here, a terrible collapse for 4 to 5 months and then a big rebound. And part of the reason is, look at Germany, Peter. They've come up, like our stimulus is 16.4% of GDP, and people like Adam and myself can't believe that number. The Germans are going with 30% of GDP, which is quite extraordinary. So they've tried to inbuild growth in the future, but as Adam points out, the debt's going to be pretty big.
Yeah, is the cure worse than the disease here, Adam? Is the worry that on the other side of this we are going to be in even probably worse territory, some say, than a recession?
Yeah, look, I mean, increasingly I am concerned that the cure is worse than the disease. I mean, it's the economic wreckage that we'll be looking at the end of this year in Australia and around the world is just extraordinary, and that's going to last 10, 20 years. It's not just dollars and cents, as people say. It's people's lives. It's businesses destroyed. There's going to be a lack of competition in the economy as many businesses go to the wall. There'll be huge unemployment. The debt costs we've already discussed. It's a difficult question of how much is too much, but certainly I think at the moment the balance of evidence is suggesting that the world has overreacted and basically become incredibly hysterical and foist on itself the largest debt since the Second World War for which is just extraordinary when you think about it. That, I mean, the Second World War, tens of millions of people were killed, and in this case, 30,000 have been killed, obviously tragically, but we have the same amount of debt.
Yeah, and it's food for thought, isn't it? It'll be, I think, a continuing topic every night here, not only the health impacts, but the growing economic toll. Peter Switzer and Adam Crichton, thank you very much for your time.